Truworths incorporates Truworths Man, YDE Identity and the Daniel Hechter brands.
In addition, it has also added things like Earthchild and Nachi in the children's space, and those are of course individually branded stores. And then it, like others, has made a foray internationally, acquiring a UK-based group called the Office Group, which is more in the sort of shoes and office wear market, targeting women who are in the professional world.
Market cap 42.5 billion rand, price to earnings ratio of 14.8, dividend yield of 4.5%. Let's get your thoughts before we go to Paul.
I think this is a great business. It's got a really good balance sheet, which has enabled them to make those two acquisitions last year, Earthchild and Nachi, and also we see them expanding internationally into office. But what does concern me about Truworths, and I'm not sure where you stand on this, but the high percentage of credit sales just concerns me. We've seen the interest rates increasing, and we've also seen regulation becoming far more difficult to extend credit. So those would be my only concerns, but overall, a good quality company.
Given my outlook for the South African consumer, it concerns me as well.
Look, Michael Mark, the CEO of Truworths, was one of the first people to take the lead with in-store credit and funding that off the own balance sheet of the company. So he has been the CEO since 1991. Remember, there was a period late last year where his successor was identified and then left. So Mr. Mark is still the CEO, although that succession plan still remains, business that's
It is happening. It is
happening. One must assume so. It was a very long period. But they've always been very good at their credit extension and very cautious and careful, and they've always been quite successful at keeping their net bad debt provisions very low.
Can we look at their share price performance?
But bouncy. Again, earlier than Mr. Price, they also had a couple of sales-related disappointments where, continuing sales weren't quite as strong as they needed to be.
So buy decisions, again, coming back to bad buy decisions, or is it difficult to pin down to that?
Sometimes it's about the timing of Easter and bump like that, and then you get the introduction of your cold clothing ranges in too early, and then they don't sell that well, and you have to discount stuff.
Sounds like you should be running a store.
I'm very glad that I don't. Very glad.
Grant, your overriding view on Truworths.
I like it. It's a good quality company. I'm just a bit cautious on the medium-term outlook, so I'm happy to avoid it for now.
Look, the European thing is interesting because we're going to talk about Foschini in a minute. I mean, Europe, if you add up all of the European economies, is a bigger economy than the United States of America. It's like a $16 trillion revenue turnover. So people sometimes talk about whether Europe or not, whether it's too competitive or low growth. But as Europe sort of gets itself back to more normalized growth, and it's still very anemic, I think there's a lot of potential up there. Office is not yet big enough to make all of the difference for Truworths, but I'm more inclined to...
So it's Europe that could be the value unlock for Truworths.
Because remember, most of these acquisitions were done a year or so ago, and now the rand is a lot weaker to the pound or to the euro, and that's going to kick in a bigger earnings contribution, provided those businesses trade profitably.
So I've got a not hot, Grant, from you. Are we okay on time?
Yeah, I think we are. I'm going to go with hot on this one. I know we're a little out of sync, but that's fine.
Very out of sync. I don't think you've made one call, except for Woolworths.
And that's an indication of the fact that whilst these are really attractive businesses, it's quite a competitive environment, and it's not the easiest trading circumstances now. So it's a little bit tricky to decide where to fall, but I'm going to fall on hot for this one.